Yo guys, so welcome back to another edition of The Trading Guys with me, Ryan Mack, and today I am going to be jumping in and starting to actually teach you how to trade Forex. So my aim throughout all of these videos is, I know what it's like, right? It's a really dry subject. Sometimes it's really hard to take on board. I remember watching my first ever Forex video 6 years ago. It was some random thing, a guy called Steve Morrow, who is fantastic by the way, and I follow a lot of the stuff I do is the same as him. He's an ex-market maker, but I remember as a total newbie, I didn't know anything about Forex, and I had to sit down and watch this 4-hour video that he had just compiled into one, and it was, honestly, it was horrific. By the time I got 40 minutes in, I was literally sitting there like, it was, in the army we call it death by PowerPoint, you know, and it really was that. And because it was so long and he was talking about stuff that I had no idea what the guy was going on about, it just made it really awful to watch. So I'm going to be kind of conscious of that. I'm stripping back everything, and I'm just going to try to make each video 15 to 20 minutes long so that it's easy to digest. And then at the end of each video that you've watched them, right, I'm going to make them all bite-sized chunks, give you a little piece. At the end of every 15-20 minute video, I would like you guys at home to go away, don't just bang on Netflix, but go away, jump on the trading platform, and then go to the points that we've been talking about in that specific video so that you can try and find the patterns yourself. So guys, after we go through one of the videos here, what I would like you to do at the end of each and every single video is don't just jump away, you know, and do your own thing and head out and jump on Netflix again, because you're just going to forget it. So then it's going to mean there's no point in you even doing it in the first place. So the best way to learn it is whenever we cover each video, jump onto the trading platform. For example, today I'm going to show you the weekly structure, the directional biases and so on what's called the H4, the 4-hourly chart, and the H1, which are both known as the macro. You have the micro and the macro. They're known as the macro. So that's what we're going to be covering today. So after that, you would then jump on a trading platform. I want you to jump on the H4, sorry, and I want you to look through and look for the patterns that we've discussed today. Jump on the H1 and then have a look through that as well. All right, so just to let you guys know, there are loads of ways that you can trade, right? You can do scalping, you can do swing trading, you can do, which is similar to position trading. You can do like me pattern trading, but I trade in line with the market maker. Whereas most traders, if you said to them, what is a market maker? They would have absolutely no idea what a market maker is. They don't even know that he's the guy who manipulates the markets. And he's the guy who creates all these patterns. He's the guy who makes the candle go up when he wants, makes it come down when he wants. So here at the Trading Guys, we trade in line with the market maker. And that's only because when I first learnt to trade, I actually learnt from market makers as opposed to from traders. And the market maker is now my chief trader. But here's something else that's great with the stuff that I'm going to teach you, right? There are literally hundreds of strategies for trading, and loads of them are good, some of them are absolutely nonsense. So what I would like to say to you is, if you currently have a strategy that works for you, by the way, absolutely use it. Do not think for 1 minute I'm here to say, oh, your strategy's nonsense, you better use mine. I am absolutely not, I promise you. Excuse me. There are hundreds of fantastic strategies out there. I'm just simply sharing mine with yours because I feel it's very easy. I left school at 15, I didn't have any grades. If I can learn how to trade currency like this, then absolutely so can you. But here's the good thing, right, with what I'm going to teach you. If you are a scalp trader, right, and you like scalping, if you watch a trading course teaching you how to do swing trading, position trading, you cannot use that information with scalping because they're two totally different worlds. You just can't use it. If you are a swing trader or position trader and you watch a course on scalp trading, you cannot use any of the information from scalp trading in your swing and position trading because they're two totally different worlds. However, it does not matter. If you want to fully copy my trading strategy, by all means, I'm going to teach you it and you can. But here's the most important point. If you have a strategy right now, scalping, position, swing, whatever that may be, and it's absolutely working for you, you can still use that, you can still crack on. But you can also use all of the information that I'm sharing with you to bolster up your indicators and have more tools in your box, regardless of what strategy you have. Because I'm going to be pointing out what the market maker does to manipulate the markets, and you can use that for any strategy. Okay, so it's not about use my strategy, use whatever you want. If it's working for you, then bloody fantastic. Don't try and fix something that isn't broken. All right. So for me, before we jump on here, I'm going to go on the screen. My trading days, right? So here's where the market maker will shaft you, right? Never ever trade on a Friday. What he does, his plan on a Friday is to get you locked in to trades, and then he's going to hold you there in limbo. And you're going to be sitting sweating, you're going to be trapped in a trade. You're either going to close the trade, right? So you're going to be down. Or you're going to hold on to the trade thinking, oh, I'm going to be up on Monday, I'm going to be up on Monday. He knows where everyone is. He knows he's got everyone trapped here. And by the time Monday comes, before you get out your bed, he's smashed a candle high, smashed a candle low, smashed your stop loss. So you've had fees to pay over the weekend because you've been trapped in a trade, and then you've been smashed in your stop loss. Do not ever trade a Friday. By all means, have a look on the Friday if you wish. But you have to be disciplined not to place a trade, because he will make it look on screen that, oh, this looks like a great trade. He's going to get you involved, because it's all designed psychologically to make you do that, the same way as a puggy machine, the same way as gambling in a casino, and he's going to trap you for the weekend, okay? Now, Mondays, pardon me, I have traded Mondays before. I won't say I never trade them. I have, but in general, I don't trade them, because a Monday is just a day where a market maker, it's where he wipes up everything that he trapped in for the Friday, and then he sets it up for the rest of the week. So then I always know that every single week my trading days is a Tuesday, Wednesday and a Thursday. I look at the markets every day just so I can stay ahead of the game, but I only look to place trades if there are trades to take on a Tuesday, a Wednesday and a Thursday. Okay, people may, there's days where I'm like, I would never touch a trade today. Today's a terrible day for trading. And then I have loads of trader friends who text me like, yeah, I smashed out 5 trades today, and they all came in. So you also have to be aware that when I say I do not touch this particular trade, that is simply down to my own personal judgment, because I was always trained, be a sniper, don't be a machine gunner. When I started trading, I just copied my chief trader verbatim. Every single move he made, every single thing he looked out for, I just copied him verbatim, and I never ever budged from it. My chief trader places 1 to 3 trades a week, and I copy that exact same thing. If there's 10 trades, I'll take 10 trades, but I mean, especially now with all this COVID stuff, there just isn't. So I pick my trades very carefully, and I tend to go for a lot of pips. So most people, when they trade, they'll get out at like 5 pips or 7 pips or 10 pips is like a party for them, you know. But again, because I trade for the long sustained run, each trade I place, I very rarely place a trade, 1 to 3 trades a week. But when I place the trades, I gather 35 up to 70 pips each time. Sometimes I only trade once in a week, but I've got 70 pips for that week, which is bloody fantastic. Okay, so without waffling any longer, let's go. I'm going to jump across to the screen now, and I'm going to take you through the weekly setup that a market maker goes through. I'm going to show you how to identify it on the H4 and the M1. Okay, let's go. Right, so guys, look, I'm just going to get straight into it here. Let's have a look at the, let's see, I'm going to show you something on the H4, right? Okay. So when you come to what we call the H4, which is the 4 hourly chart, right? Now what that means is every single candle that you see on here is 4 hours long. So it takes 4 hours for any of these candles to move, okay? If you go to the H1, all of these candles that you can see is 1 hour of time in movement, right? And the same goes the M30. That's every 30 minutes, which we don't use. And the M15 means that every time you see one of these candles, it happened within 15 minutes. So that's 15 minutes, 15 minutes, 15 minutes. So every 4 candles is 1 hour, right? And here's the H1. So every candle here is 1 hour. So obviously 4 candles is 4 hours, and so on. The H4, each one candle is 4 hours. So of course 4 hours, 8 hours, and so on, okay? One of the things, look, see when you see all this here, right? You see all this information, all these different things, and you look at this as a newbie and your head is fried. What does the 3 mean and blah, blah, blah. Just ignore it. It's just all white noise, all right? You don't need to know all that bollocks. What we're essentially looking for when we come on the H4 is a directional bias, a weekly setup, And all I really look for in the H4 is what we call the Gartley. Okay, this is it here. Now some people, does it even tell you that? Yeah, okay. Some people call this the W because it looks like a W, right? Well, the real name for it, there you go, is the Haikanashi, okay? But we call it the Gartley. And some people, in our office, we call this a butterfly because it looks like the shape of a butterfly, right? Now you can also get this shape the opposite way round so that it looks like the letter M, or in my office we call it a bat because it looks like a bat that's ready to drop down and take off and start flying, whereas this one looks as if it's a butterfly and it's about to fly up, okay? There's a really childish way that I remember which way means it's going to go long or going to go short, and all you do, it's dead simple, guys. You go to the outside, you go to the top. If it's obviously a W, then you would go to the top of the W. If it's an M, then you would go to the bottom of the M and you would trace the outside, you know? So look, if it's the W here, you come down, down, up, down, up, down. So that then tells you, as long as you see this at this point here and it hasn't already ran, then this is going to be a short trade. And as you can see, bang, the trade ran short. Let's have a look to see if there's any others. Well, there's a half a Gartley. Here's another one. Look, here's a butterfly. Look, down, up, down, up, down. I know it's so childish and so babyish, but I'm trying to teach this in such a way that anybody can pick it up and dead simple, right? So there we go, down, up, as long as this hasn't, obviously this is already ran, right? But if this hasn't played out yet and you look on here and it's only just got to here, then that's one indicator that it's going to run short, right? Here's another indicator. Look, here's the exponential moving average, the 800 EMA as we call it. So this is like a rock solid concrete wall that this just doesn't usually break past. Of course it can. Look, it's broke past it here and it's broke past it here. But what we say is, in general, this is a concrete wall. The 200 EMA is like a wooden roof or a wooden floor. And then you get the 50 EMA, which is like a kind of cardboard. So that's in terms of how hard it is for the market to break through them, okay? It's quite easy to break through cardboard. It's a little bit harder to break through wood. And it's quite hard to push through concrete, although all of them can be broken through, all right? So there you can see, there's one indicator telling you that this is going short. Okay, that's going to go short as long as this hasn't played out. The second indicator, oh my God, look, it just got rejected at the 800 EMA. It's going to go short. And also, if you have a look down here at the TDI, Traders Dynamic Index, look in line with this, oh look, it's overbought. This blue line represents being the overbought, you know, the kind of margin line. This is overbought, so it's going to go short. So in this one H4, I've just given you 3 indicators that this market is going to start going short, and you can see that it did, okay? That's really all you need to know on the H4, guys. All you're really looking for is, do you have a Gartley telling you it's going to go anywhere? There are some other things you can look for, but for me personally, I like to take the directional bias from the H1 and not from the H4. Okay, so let's go back up here. We're on the H1, okay, let's zoom out. Zoom back in, right. Is there a directional bias? Yes, there is. The directional bias here has been running long, okay? Have you identified a peak or an anchor point? Yes, I have. So obviously this anchor point is the old one because it's already ran, right? And remember, the market maker will push a directional bias, i.e. going long, or the market going short for 3 to 5 days before he will give you a correction or a reversal. All right, now look, 1 day of rise, 2 day of rise, 3 day of rise, then he gives you a correction, not a reversal, a correction, because he can't keep pushing it long, right? He can't. So he wants to keep going long, but what does he have to do? He has to make space. So during the midweek, he gives you a correction. Bang! Correct, price corrects, starts running long again. Okay? Let's have a look again. Let's jump on the H1, okay? Here we go. Do we have a directional bias? Yes, there is a directional bias going long. You can see it's going long, right? How many days has it ran for? 1 day of rise, 2-day of rise, gives you a correction, not a reversal, correction, because if it's a reversal, he's going to keep pushing down, right? But it's a correction. He gives you a price correction after 3 days, remember? And then he starts pushing it again. Let's have a look. H1, okay. Is there a directional bias? Yes, there is a directional bias going long. See? Have you identified a peak point or an anchor point? Well, if this, look, if obviously the market had only played down to here, then you would be going off this. This is your anchor point, okay? But because the market's already ran from here, this is no longer your anchor. Well, it is your anchor, but you're now looking for, okay, have you found an anchor point? Yes, here it's here. Okay, from the anchor point or the peak, if this was up here, how many days has it ran? Has it ran the 3 to 5 days? Well, let me check. 1, 2, 3, gives you a correction. 4, 5 days of rise. And it then, what does it give you now? It then gives you a brand new peak point. So this is your old anchor, this is your new peak. So if you're a swing trader, this is bloody fantastic for you, okay? You're now looking to take this short, not right away, but you want to see what it does on Tuesday, okay? Remember, don't trade on a Friday or a Monday. Let's have a look. Let's have a look at the H1. Same again. Here's your anchor point. Here's your new peak point. How many days has it ran? 1 day of rise, 2 day of rise, 3 day of rise, gives you a price correction, gives you 4 day of rise. You know, it's the pattern is there. Human beings understand patterns. If I said to you apple, banana, apple, banana, apple, banana, what comes next? You're going to say apple, right? Because you understand the pattern. It's exactly the same. The market maker will push the market for 3 to 5 days before he gives you a price correction or a price reversal. Look, here is the last anchor point. Okay, here it is here. How many days has it ran? 1 day of drop, 2 day of drop, 3 days of drop, and then he gives you a full-blown correction. You see? Sorry, a full-blown reversal, sorry. That's what I meant to say. Now, let's have, it's in every single pair. Let's have a look. Now, this is great. I wanted to show you this. This is what we call a flat market. Look, it's up, down, up, down, up, down. Look, he's just bouncing around the EMAs. So this would tell you there is no market maker presence in this currency pair at this current time. There are two ways. You either have the market maker presence or the market simply moves from buyers. This is buyers, okay? You don't want to get into this. I'm going to cover this more in my next video, okay? But what you want to do now, go away and look at your currency pairs and see if you can identify what we've just discussed with directional bias and how many days of run. Okay, guys? See you soon.